Hello. The market had a pretty flat day with the SPY QQQ not moving much, and that means the opportunities in Mag 7 also does not exist. When I say Mag 7, it's Amazon, Apple, Google, etc. I'm going to show you a few stocks that you should consider if the market remains flat. I will start with Diamondback Energy. This is a weekly chart. It means each bar represents a week. It's a US based company, and notice I drew this fib lines, and notice it hit the 50 fib, and then it formed a support and started rallying, and now it has broken 61.8 fib as well, and the next one is 78 fib, which is about $171. On a daily chart, notice the TTM is also moving favorably. Let us review what the market profile or monkey bar says. For the past few days, it has non-overlapping value area, higher and higher point of control, and buying tails. A buying tail and selling tails are important concepts that most traders do not understand. I explained that in my training, the module 6. This section reviews how to look at stock market like a doctor making decisions based on MRI versus an X-ray. Specifically refers to the importance of market profile. I kept the price really low so everyone can benefit from this low price. Frankly, it is cheaper than a pair of shoes, and what you are getting is a valuable skill that you can use for decades and decades to come, and you can get better at it. So back to buying tail. What is a buying tail? A buying tail is a footprint left by conviction buyers who think higher prices are ahead, and they will buy into every dips. Market profile is fine, weekly is fine, and daily is also good. As I was saying, it's going to 170 and it's right about 150 with a big resistance at 200-day at 157. Stock market is about assumptions and calculated guess. So it may or may not pan out, but assuming that the trend continues, we can expect about 157, at least let's say 150 by end of next week or by end of June. So with that assumption, I'm going to trade and look at June, which is about next week, say 150 by a single naked call would be $285, or you can make it by a vertical, let's say 10-point wide vertical to 160, and that will be $1.80. You can do calendar or diagonals or other strategies that are commonly popularized and used by many people, and I do have them in my training as well. Next stock I cover is United Health. United Health had brutal couple of months, and from all the way from 630 has dropped to 250 in just probably a year or so. And that amount of drop has made some big funds interested, and we can see that in the charts. This could be what Warren Buffett said in his book, I am happy buying a second rated company for a third rated price. And we might be looking at United Health in that same angle. And notice it, the market profile had a stability, and then boom, yesterday and today had a nice move over non-overlapping value area, point of control, and this is looking like a winner. So where does it head next? 338 seems to be the logical point, and right now it's 318, about $20 away, and then there is a huge gap. Who knows, it could even fill that, and the momentum says I think there's a chance that it at least attempt to do that, which means you are entering at a low risk entry point. My suggestion would be A vertical is right now 318. A 320 to 330 or 330 is only $2.85, 80 cents, or it could be 335, something like that, whichever is comfortable for you. I do not know your risk profile, your risk tolerance, and so these are suggestions that you will need to do due diligence and consider that. The next one is Oracle, which had earnings today, all-time high, and it had a monster volume after the earnings, as it is catching up and going big time in AI. The TTM is also confirming, and there's a huge gap as well. As long as the stock tomorrow or subsequent day does not drop below 195, I'll explain why. This can move up considerably. And that 195 is coming from as a midpoint of today's rally that had a good volume. So this is a fib extension. I notice it is broken and it's now heading towards 240. And again, it's a monthly chart, so it might take a while to get there, but you get the point. I'll stick with June options, and July you can wait because you might have to pay a lot more, and if it does not work in next couple of days, you're better off getting out and you lose less. So let's say 200. Buy 200 is only $370. You can actually make it a vertical, or let's say buy a vertical 200, 210, or even 215. The way it is going, it could go to 215. It's not paying that much. You can do diagonal or vertical as well. But don't wait too long because this market is very fragile, and if it can break 195, just get out and take the losses. So your trading strategy should first say, what happens if I am wrong? How much will I be losing? And am I okay with it? You have to have an honest answer with that before you can take any positions. Trading is a skill, and like any other skill, you need to learn it properly and spend enough time to get better at it. Couple of tips from here, couple of ideas from there, from Twitter or Instagram. Yes, it will help, and many of them might even be profitable. But over long run, unless you have your own system, you are going to get into a pitfall, and hopefully you avoid that by developing your own skills. To make a sustained trading income, you might need to put a lot more effort, and my web-based training is an honest effort in that direction. The price is only $100, and with a full money back guarantee if trading is not for you. But it's my opinion that you will find this incredibly useful. Good luck with it.